Let's take a look at the local market, closing about 0.5% in the red this afternoon, brought down by banks mainly, as the rand lost further ground against the US dollar. Lots of company news out today, and I want to get some perspective from Wayne McCurrie from FNB Wealth and Investment. Wayne, thanks for joining us. A lot of results and company news out today that can tell us not just how companies are performing, but what's happening with the consumer. So, Wayne, let's start with Woolworths. I mean, showing a rather flat performance on their year results. Here's a retailer, Wayne, that's coming under increasing pressure from both Checkers and Pick n Pay, who are investing high-end ranges, in smarter stores and so forth. So Woolworths has got a lot of catching up to do, and the competition's out there.
The competition certainly is stiff, but all the other retailers have been trying to eat Woolworths lunch for a very, very long time now. And Woolworths knows how to cope with competition. They know their clients, they know the market. So, it's not easy for the other big players to come in, but they're certainly trying. We all know that Pick n Pay is going to prioritize, if you like to call it that, the Pick n Pay brand. Checkers and Checkers 60/60 certainly has made inroads, but the Woolworths results were not bad. In other words, they were probably better than anticipated, and certainly their non-food South Africa was, I think, quite a positive. And even the food sales, they didn't suffer much on volume because of competition. I mean, Australia and New Zealand still a problem, but that's not related specifically to their businesses there. That was all to do with lockdown and trading restrictions, etc., in this time period. Look, the market certainly liked their results.
Yeah, I see that. The other company that shows us a thing or two about how consumers are reacting, Cashbuild. So a year or two ago,
yes,
when the lockdown was tight, people were doing up their homes, Wayne. Today, I see its profits are down by a third. That's Cashbuild. And I mean, presumably, people are trimming down on these home improvements, and it's showing in their results.
Correct. No, that is quite clear. That is exactly what's happening, is that they are pulling back on their home improvements because they've done all the home improvements essentially. Everyone actually went back and they've caught up with the backlog, if you like to put it that way. All of the stuff they've fixed up around the house already, and they've just now buying less, I suppose, DIY and less home improvement. And we've seen the turnover down, and they've even said that the turnover is going to be down further.
Yep.
Well, it was down further in the post-year end. The next 6 weeks is also down. But this is quite normal. They had an exceptionally good year the previous year. I mean, truly an exceptionally good year. They paid out a very, very big dividend. I mean, they cut their dividend by 70%. And now is actually the time I think we should look a bit closer at the company, because you're still going to get, even on the reduced earnings, still going to get a fairly nice dividend yield. And this actually is a good company, and people will start doing DIY and home improvements again going into the future. So it's very similar to Builders Warehouse. It's a very high base that they're working off.
We can still hear you loud and clear, though. Your pitch has gone, Wayne, so I'm going to put one more to you. I mean, just some thoughts on the markets. I see the banks taking a bit of a beating today, and that brought down the oil share. And then the oil price, I mean, if you look at next week with the petrol price coming up, that oil price has been sitting below $100 a barrel for the last week in August. So, it might bode well for what we are hoping to see with the petrol price next week.
Yes, there will be a decrease in the petrol price, and I think the petrol price is going much lower. I think oil price might end up at $70 or $80 a barrel before the end of the year, because it's quite clear the global economy is slowing down, and it's going to slow down more rapidly. And the Federal Reserve Bank last Thursday said, we are going to kill inflation, even if it means pushing the economy into recession. And in a recession, demand goes down strongly, and all prices are rolling over. Food prices are rolling over, commodity prices, the oil price, everything's starting to actually fall. So I think we'll see reduced inflation second half of next year, and maybe even some interest rate cuts. But right where we are now, it's still very, very tough, because interest rates must unfortunately go up still before they start to fall next year. But clearly on the fuel price, I think this will be the start of quite a few and quite material reductions in the oil price, which is, of course, will be fantastic news for everyone.
Yeah, we'll look forward to it. Well, thanks very much indeed. Wayne McCurrie from the FNB Wealth and Investment Group. All right.